Hey everyone, it's Mike from Orderflows here, and welcome back to my channel. I'm glad you could join me for today's video. We're going to be talking about market exhaustion. Yesterday I talked about market exhaustion using the volumes traded in the bar at the sort of extremes, turning points in the market. But I did get a question from a user asking why I did not show exhaustion with the help of the order flows ratios. And actually, that's what today's topic is about, because there's more than one way to skin the cat. There's more than one way to determine exhaustion taking place in the market. So before I jump in, if you enjoy learning from my videos, be sure to hit the subscribe button and click the notification bell so that you don't miss any new upload. And if you find today's video helpful, hit the like button for me and leave a comment sharing your biggest takeaway, or leave a comment asking what you'd like to see in another video. I love hearing your feedback, and your support really does go a long way in helping me create more videos just like this. So again, if you're getting value from my channel and want to see more, be sure to hit that subscribe button and let's grow together. So let's go ahead and get started on today's topic. All right, so let's get into it. So remember yesterday, right, I did a video talking about identifying market exhaustion through the exhaustion print in the order flows trader. Okay, so in the settings, right, you can see it in here, exhaustion prints, right in there. I talked about that. That's one way to determine the exhaustion in the market. Okay, and as a result of me posting that video, here Amy Trana-PW3JP left a comment saying, is there any reason you did not show exhaustion with the help of flow ratios? Okay, so one of the things that I've been known for in order flow is developing these numbers you see above and below the bar. Now that's different. That's not delta or anything like that. What that is, it's taking the volumes that's trading at the top of red candles and finding out what the ratio is of the order flow. Okay, or the bottom of green candles. That's why you see some red numbers and some blue numbers. If it's just the normal order flow going through, it's just going to be a black number, like 1.82, 2.23, 0.97. Okay. Now there's two types of order flow ratios. There's a ratio bounds high. There's a ratio bounds low. Okay. And it's funny because I've seen people copy this whole concept of these ratios. Since I first released the Order Flows Trader in 2015, it was copied immediately by some other software companies, and they, were marketing it. I was laughing because it's, they marketed it as the order flow algo, right? Like it was some super duper secret sauce, and it's not. I mean, you could figure it out yourself just by looking at what the volumes are trading at the tops of the red candles, the volumes trading at the bottoms of green up candles, and really what you're looking at is the ratio. Okay, how the top of a red candle offer side is forming, or the bottom of a green up candle, how that is forming. Okay, now just really quick, there are two types of ratios. Okay, now I used to do these things in my head, before I sat down with the programmer and said, hey, you know what, this is how I look at order flow, right? I used to just calculate that because I could look at the volume and sort of do the math in my head. Sometimes I'd have to use a calculator, but generally speaking, it's pretty easy. So again, there's two types: ratio bounds high, which indicates price exhaustion, and it's a number 30 and above. Okay, there's ratio bounds low, which indicates price defense. That's 0.69 and below. It would go from 0.69 to 0. It can't go below 0. Okay, you can't have a negative number for a ratio. And it's funny because I see people copying this concept and literally using the exact same levels. And it's funny because I've adjusted these over the years. I used to use 25 for price exhaustion. I used to use 1 for price defense. I've just sort of honed it in based on my own trading and the markets that I trade. Because honestly, in other markets, you could probably still use 25 and 1. But let's take a look here really quick. So this is 10 years, right? It's a 4-range chart, and you can see at this high of the day, you've got a red number, 66.96. All I'm really concerned about is it above 30? If it's above 30 for a ratio bounds high, okay, 30 and above, I don't care what the ratio is. All I care about is that it's colored red, indicate to me that it is price exhaustion, okay? So 30 and above is price exhaustion on a red candle. Above 30 and above on a green candle is price exhaustion. So you're going to see here, okay, right? We got this high up here, right? And this goes back to the whole concept of, other software copying my ideas, I don't mind them copying my ideas. The order flow is available to everybody, right? And we could all sort of figure it out ourselves. But when I see software copying it and they don't understand how to use it, that's what bothers me. Okay, honestly, is because they put it in their software like, oh yeah, we have that in there by our software, but they don't understand the logic behind it and how to apply it to trading, and it sort of leaves a gap, so to speak, in the analysis. So they'll take it and say, well, every time you got a blue number below the bar, it's bullish, or a red number above a bar is bearish. Well, that's not really the case, right? Because if it's market exhaustion, where are you looking for the market for exhaustion to come in at? Well, you're looking at exhaustion coming in at a swing high or a swing low, right? So here we are, right? Rallying up to a swing high, right? I have a ratio bounds low, 66. Now, if you're looking at the volumes, you see 49, 2,000, 3,800, okay? Oh, sorry, 3,200. So 49, 3,200, 2,200. It just looks like normal order flow. But then by using the order flows ratio, right, it's doing the calculation. It's telling you, no, there's actually price exhaustion taking place up here. Now you're at the high of the day and you have price exhaustion. What do you think the market's going to do? You're going to look for the market to potentially sell off. Now people are going to say, well, you have bullish ratio here, here, and here. Market's not going up. Well, is this move, you got to be asking, is this where I'm going to be looking for exhaustion? No, right? If you're looking for bullish exhaustion, right, where are you going to be looking for it? Well, you should be looking for bullish exhaustion near the low, because it's telling you that the move down is getting exhausted, right? So, here, this was at 6:42 last night. This was at 9 p.m. last night. This one started to go up and came right back down. Here we hit that low and rallied up to the high. So if you're looking at these ratios, you got to put it in context of the market, right? If you're looking for bullish ratios, you want to find them at lows, swing lows, all right? If you're looking at bearish ratios, you want to see them at highs or, swing highs, okay? Now, there's a setup that I like to use, sort of one of my bread and butter setups, if you would. You always hear people say, oh, I had a bad day, I should just only take my A+ setups. Why aren't you just taking your A+ setups to begin with? It's like, I don't get it. These professional, what do you call it? Professional funding program traders that blow up the accounts. Oh, I should have only taken my A+ settings, my A+ setups. Say, well, you should only be taking your A+ setups. I don't know why you're all of a sudden think you're some master trader, but what this setup entails. Okay, just give me a second here. Let's make this a little bit bigger so I could expand it. It's what I call a ratio and divergence. Okay, and I've been talking about this for years, and people that are my software users, some of them literally bought the software just to trade this, right? I talk about this almost every week in my trading trainings. It is a divergence, right? A new or equal high with the bearish ratio right here, okay? Now, did the market sell off immediately? No, it's sort of working its way down, a little bit slower. It's coming down, rallies back up, coming down. Now it's starting to come down. This is Friday afternoon already. Bullish ratio, divergence, right? Did it go up? Yeah, it went up a little bit, but this is the nice move from the low all the way up to new highs. And, you see here, bullish ratio. The market didn't rally right away. It's just hanging, going sideways. But you don't have the divergence. Okay, so again, this is all price exhaustion here. Now, another question people ask me is, does it matter? Like here you've got a ratio of 406, and here's 32. Is the 406 stronger than the 32? No. It's treated the same. As long as it's blue, I don't care if it's 4,600 versus 32. All I'm really cared about, because it's a ratio, remember? It's just looking at the ratio of the volume that's taking place at the different levels. All I'm really concerned with is it over my threshold of 30. So you can see, there was no divergence coming in on any of these, right? Because it's all still negative delta down here. Okay. Finally, it did rally up, but I just find those to be the strongest potential trading opportunities, right? Where you have the divergence. That's this gold color here with the ratio. And again, there's going to be times like this where, you get your divergence in ratio, and I mean, it sort of goes up a little bit, but it's not the big move, and then it comes down, makes that new low, then makes the move that you're expecting. Okay, so when you're in a trade, another way I like to use ratios, okay, is if I'm in a trade, the market is just sort of like hanging around, going sideways, then it gives me I'll talk about this in a separate video, a ratio bounds low, which indicates price defense, right? 0.24, it's 0.69 to 0. So again, if it's a bullish ratio, and if it's in the move that I'm in, to me that's a sign of, reassurance. It's not necessarily a sign to look to get in, right? Because I should already be in off the ratio and divergence, but then I see, something to confirm with me that, hey, you know what? Yeah, this move is, now we're running, we're pulling back and we're running into price support that you should be looking for the market to keep going higher. So let's take a look at E-minis today. Okay, so this is the 10 years, right? And, not everyone trades 10 years, not everyone wants to. A lot of traders like to watch the E-minis, right? Because there's a lot of movement, right? A lot of opportunity. And same thing, right? I'm looking at anytime we hit a low, I'm looking for the bullish ratio and the divergence, okay, right here. 124, you got the positive delta of 19. I mean, there's some other bullish things in the order flow as well here, right? You see the nice delta increase, 19,484, 964 in here. But just this alone, the ratio, the bullish ratio and the divergence, right, the gold and the blue, to me, that's an automatic trade as long as the next bar starts trading higher, which it does. You see it rallies up from, what is that, 65 and a quarter, all the way up into the 70s. Does pull back to sort of your entry price, goes back up, pulls back down to literally the previous low, right? Now you have a divergence, you don't have a ratio. But again, if you're trading this ratio and divergence, where's your stop? Well, your stop is right below where the ratio is coming in. So, a tick or two lower, because if the market comes down here and takes out this ratio and this divergence, there's no need to be long, right? So again, what's your risk, right? You're getting long probably from 65 and a quarter, 65 and a half. Your stop's down here at 62 and a half, 3 points. Okay, it made that move 5 points, did pull back here, tested it, 62 and 3/4, still holding, gets within a tick of your stop, then boom, and then it makes this nice, gigantic move up that we're seeing right now, right? It's, I'm not, again, if you're long from 65 and a half, geez, where are we trading now? Trading 85, okay? And, just let's see if there's any more ratio and divergence, because you see here, right, as the move is going down, bearish ratio, bearish ratio, bearish ratio, bearish ratio, bearish ratio, bearish ratio. You don't see any bullish ratios. You see one here. But when you're in a trade and you start seeing, when you're positioned directionally and you start seeing those ratios going in your direction, that's nice to see. And people say, well, you got one here, you got bullish one here, a bullish one here. Yeah, but overall, it's mostly negative. Okay, again, as I say, it's not just about trading every single ratio, right? You want to put it in context of the market. Now here you got a high, but there's no ratio because it's a green candle. So it's not looking for, exhaustion or defense at the bottom of, or at the top of a green candle. It's looking for it at the bottom of the green candle. Okay, right here, 43, right? 4, 172, 81, 150. So again, if you're using exhaustion prints, and you have it set at 1, 2, 3, you're not going to notice this, right? The ratio is helping you pick it up. I mean, now if you set your exhaustion print at 9, yeah, the 4 would also show. So not only would you have a bearish ratio, but you'd have the divergence, got negative delta minus 629 as well. But this is the ratio, 43, and the divergence, the negative delta at the high. And again, where's your stop? Well, your stop is just behind this high, 96.25, 96.5. Where you're looking to get short, 91.5, somewhere in here, right below the low of this bar. You want to make sure the market's going in your direction. Call it 91.5. Market does pull back 2 points before selling off down to 87.5, and then going sideways here. It does make a new high, but again, it can be a powerful move, right? Sometimes you can see it go literally from the low to the high, but you got to determine how you're trading, right? If you're trading a 1 minute chart, I don't think it's fair to have a 2-hour time frame of your trade. Okay, if you're trading a short, if you're a longer term trader, 5 minute, 15-minute chart, or a swing trader, yeah, you can hold positions for hours. But if you're on a short time frame of, a minute, 30 seconds, ideally, you want to keep it within 15, 20 minutes, maybe 30 minutes. You're not, looking to get short here at 10 o'clock and hold it all day, until 11, 12, 1, 2 o'clock. No. You want to take what the market's going to give you because you're a short-term intraday trader. All right. So I hope that that's going to wrap up this video. I hope you find these tips helpful for your understanding of order flow, especially with the ratios. This was a ratio balance high, which indicates price exhaustion lesson. So let me know what you would like to discuss next by leaving a comment below. And again, if you enjoy my videos, make sure you subscribe to the channel and hit the like button and hit the notification button as well so you don't miss any new upcoming videos. So thanks so much for watching, and I'll catch you guys on the next video. Bye-bye.